Hello traders, and welcome to the weekly market review for the week ending 30th of April 2021. Wow, amazingly it's running very quickly, and we're already at the end of month 4 for this year. Time is flying. So let's have a look at what's going on in the markets today. And what we are also going to talk about today is open equity. Okay, you've heard the term and being brandished around when we talk about some of our strategies and stuff. So I'm going to talk about open equity. But before I go into there, what I'd like to remind you for is be sure to subscribe to our YouTube channels. Okay, if you go to the bottom of at the bottom, you'll find the link to subscribe to the YouTube channels. Please do go on there, have a look at the videos, and like them as you view them, so that you can get information and knowledge from there. And also the trader's profile. On the link there's also a trader's profile, so this is to get you into a understanding of what kind of trader you are. So very good little bits of kit and information for you to take advantage of there. So be sure to do that. Subscribe to the YouTube channel and go onto the trader's profile and get yourself into a zone. Okay, open equity. Okay, what is open equity? So we want to look at open equity. Open equity is the point of entry on a run to the maximum point reached. Okay, so it's from the point of entry to the maximum point each is classed as the open equity for a particular phase. Okay, so as we know, the market moves in cycles and each cycle has a phase. So if we're looking at this move from this one here, okay, it's going down, so down to here would be phase 1, and then going back from there to the top would become phase 2. So that's phase 1 and phase 2. Okay, and what we're looking for is wherever you enter the trade to the maximum point it reaches. So for example, if we were on this trade here and we're going to enter on the close of the confirmation bar, okay, this one here being the confirmation bar there, okay, then we'd enter at this point there, and the maximum point reach would be where the next swing arrow forms, would be there. So this would be classed as your open equity for this trade. Okay, this is how we look at the open equity. Okay, why do we need to do this? Okay, so what we want to do is we want to take trades that are going to have some legs. So basically we want them to move for a while, in a particular direction, whether it be short or long. Okay, so we want a trade that goes with a bit of momentum and has some legs on it. Yeah, trade length. Yeah, we want to see how long it goes for, how far it's going to reach, but all of this is something that we can also quantify. Okay, so what do we do? What is it? Point of entry to the maximum point reach. Why are we doing it? Okay, because we want to make sure that we take some of the longer trades that form in the markets. Okay, and how do we measure them? So we measure them from point of entry to the maximum point reached. So wherever your entry is on your profile, if you're taking it early and you're looking for, say, a primary move, so there's a primary there. If you were to enter on the low of this seller bar there, then from there to the maximum point reach would be where the swing arrow forms, and that would be your open equity there. Okay, and once we've got that, we can move along and measure the next one from there to there. Okay, wherever the entry for your trade would be. Okay, And once you measure that, you can get all the figures from all the runs that you have, from bottom to top, top to bottom again. And once you've taken all of them, you can quantify that, remembering that everything we do is researched and quantified. So we quantify all the moves, and then we know that when we're taking the next trade, that we're expecting it to run for a minimum of, say, 50 pips. Okay, it could be 50 pips a minimum, or it could be a minimum of 100. So we do have a strategy which is a 100 pip move. Okay, we take a trade, wait for it to move to 100 pips, and then exit at the 100 pip mark. Okay, we also have a trade where we take it to 25 pips, because we know that from our research and all the quantified data that we have, that this trade moves a minimum of to the 25 pip mark, approximately around about 80% of the time. So therefore, we know that we have a high probability of this trade running to 25 pips, and then we can exit the trade there. Okay, so in the elite room, we have some of those trades already running, because that's what we've done. We've taken the open equity, we've looked at where it moves and how far it moves, and then we've placed a strategy according to that plan. Okay, so how do you measure it? You measure it from your point of entry to the maximum point reach. Okay, and then you quantify the results, and that tells you where you're going to be going from there onwards. All right, so open equity. Okay, what we've done is we know what it is. Okay, it is the maximum, it's a point of entry to the maximum point reached. Okay, why is it important? Because what we want to do is we want to take long trades, long running trades. So we have a bit of consolidation here. We can see this small arrows there, and then we have a run there. So we would place a trader on there and expect it to move at least a minimum of what the last few trade runs have been, and then enjoy it when it goes further. Okay, same again. So for small moves from there to there, or there, comes up to there, comes to the below there, and then we've got to break out to the upside. Okay, so a little bit of consolidation, and then we're looking for the longer move. So once we've quantified the results for how much they move, then we can take the longer trades. Okay, and this is where our strategies for, like, where we have the 20% and the 70% strategies coming into it. Okay, so we're looking for opportunities where we can take 20% of the moves, which would be approximately like this long run there. Okay, and how do we measure it? Obviously, as I said, from the point of entry to the maximum point reach, and then we quantify the results, and depending on where your entry is, whether it's at the close of the confirmation bar or on a primary swing, whichever requirement you have or whichever rule you're using on your strategy, that's where you measure from and to the maximum point reached. Okay, that's open equity. What we'll do now is move on and have a look at what the markets are doing this week. So on the euro dollar today, here we have it. Okay, as I said, we're looking at open equity. So there you have the open equity results you can see from there. And we've had a nice long run there. What I would say is from this point now, there's possibility that it's going to diminish because we've had quite a bit of a run. So what I'm looking at here is how far has the move been. All right, if I measure it from the current bar to the swing, that's 26 days. Okay, so it's 26 days there. What was the last move from there to there was 18 days. So as you can see, that it's already gone past the 18 days from the last phase, and now it's looking like it's losing a little bit of momentum with the bar to the downside, 2 seller bars there. So it's a possible move further to the downside on the euro dollar. And this is where you can look at where the open equity is before you take opportunities on this instrument. Saying about dollar Swiss, we've had a good old run to the downside, and now it's looking like we're getting a bit of a interruption and a swing there. So something to keep an eye on. Possible move to the upside on the dollar Swiss. Pound dollar, bit of consolidation going on there. No definite signs of a big move. we had our high peak there, which was, like one of the all-time highs for a while. And since then, we've got a little bit of consolidation. So no direction as such on the pound dollar, but we are taking trades on this still. Dollar yen. The dollar yen here is a new swing has formed recently in the past week or a week ago. And now you can see that we have an insider bar forming. Does it have legs move to the upside from the previous phases? As you can see, that it has had some more open equity, so there are long-running trades on here, and therefore is a high probability that this could be a further move to the upside. But being an insider bar, you can always place your trades in either direction, so we can wait for the high to be broken or the low to be broken and take a trade whichever direction it breaks out from, and see how that plays from there. Okay, Aussie dollar, looking at the equity again, looking like it's already extinguished, and now we're probably having a move further to the downside on here. However, when you look at it from a larger perspective, then you can see that there's a bit of consolidation as well going on here. It's market compression, and therefore when we do see a move, we are looking at like a possible long move or a big phase coming up, but no particular direction, probably to the downside as it stands for now. Euro JPY, again, been a while since we've had a swing low, possible swing high forming. We have a primary formation, 3-bar primary pattern. As you can see, there's a lower high and a lower low from there. So yeah, does that have more room for it to be going to the downside again? Something to keep an eye on. FTSE. On the FTSE, same again, a bit of consolidation going on there, single market compression, but it does look like it's breaking out to the high side of the upside, and there we are. So we can possibly look at a further move to the upside as it stands for now, but not a lot of open equity from the last few days. Obviously, this needs to be quantified for a longer duration to give us a better understanding of where the market is going. The Dow Jones, steady climb, still climbing to the upside. Another insider bar forming today, so something to keep an eye on to see which direction it breaks into before we take further trades on this. Coffee, good move on a coffee. Possibly, now that lockdown is releasing and people are being able to get out and about, high probability of that. And there you can see that the coffee has rallied and gone to the upside. Insider bar forming today. We've had a big bar to the downside yesterday, but today is an insider bar. No opportunities coming up on the coffee commodity. Oil, slight move to the upside, and but it's losing some momentum. Primary setup coming up on the oil, Brent oil. But it looks like it's possibly going to have a move to the downside from here onwards. A nice big bar there. Gold is having a little bit of a slow move to the upside. 2 seller bars, but looking like it's losing a little bit of steam there. However, it's just something to keep an eye on to see which side it breaks out from this big outsider bar. Bitcoin has had its new high formed like a couple of weeks back, just over a week and a half ago. There you are, the high of 64,871. So there you are, just shy of 65,000. But since then, it's lost a little bit of momentum. It's come back to the downside, and yeah, we've got a little bit of consolidation going on Bitcoin for now. As you can see, we've had a couple of swing moves formed up in the market, and an insider bar forming today. But yeah, it's a good possibility that it's still got some move to the upside on the Bitcoin. Okay, that's all for the market update for now. What we do now is I'll give you the figures for our live trading room and our elite room, where we've been placing our trades. And so for today on the market, we have in the elite room, for the primary runner strategy, 20% OE. We had no trades running, so that's 0%. On the cash in 4.0, 20% open equity strategy, 0%. The cash in 4.0, 70% open equity strategy, we had a minus 0.02% loss. So we've obviously managed our risk very well on there and minimized the loss that we've taken on that trade. On the cash in 4.0, 100 pips, the 100 pip strategy, we had a loss of minus 0.84%. And nothing on the continuation patterns, quick exits or slow exits. And that gives us a total for the elite room of minus 0.86%. And on the live trading room, on the primary runner strategy, we took 2 trades and they didn't go in our favor. So as a result, we've got a minus 2% loss on the primary runner strategy. On the lift off 20% open equity strategy, we had a minus 0.83% loss. However, on the lift off 70% open equity strategy, we had a 1.02% to the upside. So that was a winning trade for us on there because we managed our risks on there. The cash in 4.0 TSL primary strategy, a minus 1.04% loss on there, and on the cash in 1 day exit is a minus 0.36% loss on there. So the total for the live trading room gives us a minus 3.21% loss. And then across both rooms, we have elite room at minus 0.86% and the live trading room at minus 3.21% gives us a total of minus 4.07% for this week. And that's concluding this week's market update. So remembering to subscribe to the YouTube channels and also take the traders profile test so we know that where you stand with yourself as a trader on your financial journey. Okay, with that, until the next time, stay disciplined, follow the plan, and keep trading like a master.